Hey everyone, it's Rob B here with Rob D, and you are listening to the Property Podcast. It's market update time, where we bring you the latest on the property market. We talk house prices, we talk mortgages, we talk all that good stuff, but we also tackle why aren't we building things? And not just property, just anything in this country, or getting anything done, in fact. Yeah, we have a bit of a rant, but I think you'll enjoy it.
Welcome to the Property Podcast. Thank you for joining us. In case you don't know, we run a business that buys more than £100 million worth of property for our clients every year. You can find out about that at propertyhub.net/invest. This is a monthly episode where we bring you up to date with everything that's been going on in the market that you need to know about as an investor. So let's get into it.
Let's kick off, as we often do, with house prices. And Zoopla have released their latest data. It's for May. And what's really interesting is supply is up by 13%. But also sales are up by 6%. So even though there's more on the market right now, sales are still going strong. House prices are remaining stable at 1.6%. So nothing to write home about there. What's interesting for me, Rob, is that more people are testing the market, being open to the idea of selling their property. But even with the extra supply, it seems that house prices remain stable, although not exactly spectacular numbers, 1.6%.
Not spectacular by any means. Nationwide have got a higher number. They've got annual price growth at 3.5%, with prices being up by 0.5% in May. But beyond that same kind of story, it is very much a buyer's market. But as you said, there is more supply. There are transactions happening, so the market is working, which is a good thing. Very much not boom times though, and that is reflected in Rightmove's monthly data, which shows that asking prices, they look at asking prices rather than sold prices. This is earlier in the process. They have those as being up 0.6% last month, taking them to a record high, but that is the smallest increase at this time of year in any year since 2016. So the picture seems to be, Rob, growth is mildly positive, the market is moving, supply is coming on, but you wouldn't say that the market is really motoring along and confidence is particularly high.
No, not at all. And we had Nationwide delivering numbers of up by 0.5 in the last month, but that's been counteracted by Halifax, who say house prices have dropped by 0.4% in the last month. Still showing annual growth of 2.5%, but it just shows it's a bit of a nothing market at the moment. If you took all the data available, it's probably flat. That's probably the real report here. All these agencies, and ourselves, I suppose, need to find some news amongst the data, but I don't actually think there is a lot of news around house prices. Where the stories are for me, Rob, is the regional play, because the country's very much acting independently with its property markets at the moment. So we've talked previously on the podcast how the Northwest sales seem quite buoyant. It seems that there's quite a lot of transactions going on in the Northwest. And then you've got other areas like Midlands, Yorkshire, Northeast, which is just like steady, I'd say. Not as buoyant as the Northwest, but certainly not a suppressed market. But then you get down to the Southeast, an area where we both live, and in my local area, the market is dead. There's stuff on the market. People are holding for what they want for their properties, but very little is shifting. Very little at all. You're more central in London, Rob, than me. I'm in the home county, so I don't know if you're seeing anything different there. But it's really fascinating to see the contrast between the north and the south. And it's always been there, and it's been there for a number of years. And that's been well documented on this podcast. But I'd actually go as far to say that in my local market, it's the sleepiest it's been for many years.
Yeah, I don't think it's just you. I'm sure there are pockets where there is just so much demand, but the market is still moving. But I think we've got more of a polarized market than at any time I can remember. Basically, ever since 2016 or so, we've had this pattern where growth has been stronger in the north than the south. But even though that pattern has been underway for 8 years or so now, it's not abating. It's only getting stronger. We talked about in our news story the other week, the double-digit price growth that you're seeing in some postcode areas in the Northwest and in the Midlands. There is nothing like that in the South. So like I say, it's a well-established pattern, but as an investor, I don't think it's one you can ignore because all the factors are in place for it to continue this way for quite some time.
Agree, Rob. And the top end of the market in the Southeast and London, I think, have been hurt the most. I believe London is interesting. We keep teasing that, and we still haven't done anything in London. And if we change our minds, we'll let you know. But it's the top of the market that's really suffered. And that's really down to a lot of changes that the governments, past and present, have made to taxation and other policies that have led to many millionaires and billionaires leaving the UK. And those people operate at the top of the market, and those people tend to live in the southeast of England. And when you have that exodus, and we are having an exodus, the millionaire exodus in the UK is well documented. It's only second in the world after China. So we have more millionaires leaving the UK than there are millionaires leaving India, for example, which is crazy. That then makes complete sense why the top of the market in the southeast and London is really been hurt. There's no data that I have to support that, so I could be very wrong. But to me, it makes sense. It's more of a common sense thing rather than I need to see a load of data to prove it.
I think that's right. But let's move on to mortgages, because if anything is going to give the market a boost, it's going to be the mortgage market becoming more accommodating. And that is something that has started to happen. So after the last financial crisis, all kinds of stringent rules were put in place, and they have worked, you would say, so far, in that everything has been much more stable. You haven't seen borrowing getting out of control, even when interest rates were low. But now interest rates are back to long-term normal. The Bank of England is looking at these rates and going, well, what we're trying to protect people against here was a sudden jump in interest rates. That jump has now happened, so maybe we can allow lenders to relax their rules a bit. So they put out some updated guidance in March, after which many big lenders like Santander, HSBC, NatWest have started relaxing their stress tests. And Savills has done some analysis on this, and this is all sort of making various assumptions, so you don't really know what's going to happen, but they believe that basically because first-time buyers are going to have more buying power and it's going to pull more first-time buyers into the market, that it could increase house prices by another 5% to 7.5% on top of their existing 5-year growth forecasts. Which would make sense, right? Because in reality, house prices are very much affected by borrowing, and about a third of homes are owned without a mortgage at all. But still, I'd say marginal prices are set based on mortgages. If you couldn't get a mortgage at all, if mortgages were banned, house prices would fall a heck of a long way. So it stands to reason that if people can borrow more, a lot of that higher borrowing flows through to more transactions and also flows through to higher prices. So we've talked countless times over the last couple of years, Rob, about where is the next boom going to come from? It's meant to be happening soon if you believe the 18-year cycle. We have said that we don't particularly believe in the 18-year cycle anymore, but regardless, at some point you're going to have a boom because that's how markets work. And one of the ingredients in that boom happening has got to be the mortgage market getting looser. And maybe this is the first step towards that.
Next, we have a report that you may have well missed. It didn't make any front pages of any of the papers. And this was some research commissioned by the HMRC, delivered by Ipsos. And what they have done is understand the makeup of investors, landlords in the UK. What's fascinating to me here, Rob, is the investment behaviour. 60% of landlords have been intentional, which basically means that 40% were accidental landlords. They didn't intend to become landlords. They've just ended up being a landlord because they've rented a property out that they previously owned. 60%, that's not a lot. I know there's a lot of people who are accidental landlords, but those percentages are quite stunning to me, that only 60% did this intentionally. Like 60% of an industry was intentional, but 40% just happened to do it by chance or as an afterthought. For an industry that's fairly challenging to operate in now, much more challenging than, say, 10 years ago because of all the legislation that we have to deal with and all the taxation stuff that we have to deal with. I was surprised by those numbers.
Well, let's have a quick ad hoc debate, because those are shocking numbers. 40% of landlords didn't intend to be landlords. You can see how it's come about. Could have come about through inheritance or by not being able to sell a home when moving in with a partner, or by any number of factors. And the government policies that we've seen over the last, decade or so have been designed to effectively punish those type of landlords. It's people who own properties personally rather than in a company. All the legislation is harder for people who operate at a smaller scale. If you've got a job and you're a higher earner, then you get absolutely slammed on your tax on your property income. Is that a good thing or not? Because on the one hand, you've got the government absolutely slamming that particular segment of people who didn't set out to be landlords in the first place. But on the other side, you've got the housing market, you've got where people live, you've got people's homes, which are super important, where 40% of those are operated by people who don't necessarily know what they're doing, might not take it that seriously, and maybe the government would prefer that segment shrinks. You can see both sides of it, but it's a trickier one than I thought, just because that accidental landlord proportion is so much bigger than I would have expected. Another
bit of surprising data is the amount of investors that have purchased their properties through a limited company, which is 7%. 93% have bought them in their own name. Now, I expected that number to be bigger, even though for the majority of people buying today, it makes sense to buy through a limited company. People who've owned property for many, many years before the tax changes understand why they purchased in their own name. For example, Rob and I both have properties in our own name, and in a limited company. So our older properties are in our own name and our more recent purchases are in limited companies because it makes sense for us to do it that way. So I would expect the number to be bigger because of all the historical landlords still owning property. Again, I didn't expect the percentages to be what they were. You know, if I had to guess, I might have gone 60-40, but 93 to 7%, that's crazy. 93% of people own property in a way that isn't that effective from a tax point of view. It just goes to show you the difference between podcast listeners, people who are a bit newer to the market versus the older landlords, the people who've been in property longer. The majority of people, the vast majority of people who invest in property today, I certainly know podcast listeners anyway, or people who work with property to invest, it's probably the other way around. It's probably 93%, maybe even higher, who buy in a limited company and a tiny, tiny percentage who buy in their own name. So what you see today versus the overall makeup historically is very, very different.
Yeah, we are massive outliers is basically the summary of this. Another stat in there is 50% of landlords own just the one property. So the fact that we are here owning multiple properties in limited companies and all the rest of it, we are massive outliers. And I think that's worth keeping in mind when you're reading all the headlines about the rental market and about how landlords are quitting and all the rest of it. We've said it before, but this really brings it home. There's such a huge difference between the way that we are operating, and I think that most of our listeners are operating, versus people who've been doing it for 20 plus years. It's just a completely different thing.
Okay, Rob, hope you're sitting down because this headline completely shocked me, and maybe you're picking up a little bit of sarcasm in my voice here. Government in no rush to progress renters' rights bill. No rush. I feel like we've been talking about this, or you at least, Rob, have been talking about this for what feels like decades. It's probably years, but I'm sure this bill is older than one of my children. Like, it's just been going on forever. So this is like the least headline I've ever read.
I know. I think the rest of us are now where you have been for about 8 years now, which is like, can we just have this done, please? I'm sick of this. I think we're all now finally there. So apparently it is still stuck in the Lords. It has not cleared the House of Lords and come back to the House of Commons yet. Because at this point, we kind of know what it is. There's not going to be any major changes as a result of going through the rest of the process. So it would just be really helpful to know, when is it going to come into effect? Because a lot of people are now at the position where they go, well, I've got tenancies ending. Do I sign them up to another fixed term? Is it even worth bothering? Should I start explaining to my tenants what's going to happen? We're in that kind of weird period. And so it would now be helpful to know, when is it going to become law? Most people still believe it's going to be towards the end of this year, maybe October kind of time, but that's not far off and we still actually have no idea. So the news at the moment is that there is no news, and we thought that there would be news because we thought it would actually be becoming law by now. But I'm afraid, Rob, we will have to say we will keep you updated and we'll talk about this again.
We just can't seem to do anything quickly in this country. A little bit of a rant. I'm not going to talk about HS2. I've done that one before, but just a highlight of how rubbish we are at getting things built and done. The government has stepped in to make sure we build more reservoirs in our country. That sounds like a good thing. I love that the headlines and the reports that came out of this said it's been fast-tracked. We're fast-tracking these reservoirs and we're going to have 9 more by 2050. So when do the first of these reservoirs come online? Next year? Year after? No. The first one, bear in mind this is fast-tracked, will be 2036. And let's face it, they're going to be late. And the second one by 2040. Like, that's fast-tracked. China could build a whole rail network across the country the size of Europe in that time, and we might build 2 reservoirs. I mean, oh man. Okay, I'll leave it there, but we just need to find a way to build things in this country again. And it's not a Labour bash because it's not a recent problem, this. It's been like this for years, decades even. So let's just accept that we cannot do anything quickly in this country, which in some limited circumstances is probably a good thing. But when it comes to building things, not very good at all.
Well, if you'd like another property-related story about something that isn't going to get done, this one is the National Residential Landlords Association, the NRLA, which in itself is hard to say. Both versions of this are hard to say. But they have made the completely unsurprising claim that the government's energy efficiency targets are unachievable. And of course they're unachievable, because it means that there are just a couple of years to upgrade 2.5 million homes, which is clearly never in a million years going to happen. And energy efficiency is another of those that we've been talking about for years and years and years. They did, within recent memory, take the target from no target to an E, but now taking it up from an E to a C. It's supposed to be law for all new tenancies by 2028. There is absolutely no way. So for me, it's just a matter of time until that is inevitably watered down or pushed back.
A bit more positive news, at least I think it's positive, you may have a different view, is that the vast majority, to quote, of new homes in England will have to carry solar panels from 2027. And this is something that the Conservative government consulted on. Remember, these things take time, as we've discussed already. And Labour is carrying on with this policy. And we should see new homes from 2027 having solar panels. And only in rare, exceptional cases will there be no solar panels. So when you see a development from 2027 onwards, then you should see solar panels with that development as well. I think this is a good thing. I can't see why people wouldn't be up for this. Solar panels are coming down in cost all the time. I don't think it will have too much impact on the house prices itself. It's a bit more work for developers. So I appreciate we have a lot of developers listening to this who will probably be groaning, and it's more for them to do. But overall, I think for society, it's probably a good thing. It's really interesting. I've got family in North Wales and I visit there quite a lot, and it's not known for its sunshine. But there are lots and lots of homes, noticeably more homes there that have solar panels. So it seems that either they had some policy, and please write into the podcast and let us know if this is true, some sort of policy that encouraged people to put solar panels on their homes. So that's obviously a good thing. Or the person selling them is phenomenal. And wow, if you want a job, please let us know. It's just crazy the amount of solar panels in North Wales that I've seen. It just seems to be like a hotspot. So if you see that replicated across the country, I think it can only be a good thing.
Yeah, if you're the top solar panel salesperson in Wales or top air conditioning salesperson in the Northeast, get in touch. We would love to offer you a job. Right, let's move on to Hub Extra, the part of the show where we give you a little bit more, something different before we wrap up. And Rob, I bring big news this week. I have cancelled Spotify. I've been a Spotify member since pretty much when it came out. No more. I cancelled my subscription this week. And you know why? Because I realised I was already paying for YouTube Premium. YouTube Premium is probably one of the last subscriptions I'd cut. I get so much value out of that. And I realised that YouTube Music has got just as big a catalogue, actually bigger, because it's got a load of DJ mixes and all that kind of thing on there as well. And the app and all the discovery features and all the rest of it have really improved recently. And they're now, for me, just as good as Spotify. So I was effectively paying for the same thing twice. It's over. So my Hub Extra this week is YouTube Music.
Well, I am a digital service provider's dream because I have YouTube Premium. I have Spotify. I also have Amazon Music as well, courtesy of my Amazon Prime service. I'm not quite ready to cancel it yet because I do use Spotify for audiobooks, although I do have Audible as well. I told you I am that dream. But audiobooks are hammered in my household, so I will be keeping them all for now. But I will look into YouTube Music because I've not even touched it. So maybe I can be brave enough to cancel one of my services in a not too distant future. I probably should look at how much I'm paying each month, and that might incentivize me to take action. But at the moment, I have them all. I think YouTube Music for me, Rob, is the resource because I have Premium. I use YouTube a lot. I absolutely love YouTube. Hammer it daily. Like, it's incredible what you can get on there. So much stuff for research. Love it, love it, love it. But never touch the music feature. So thank you for that. I'm going to investigate.
Well, that is us done for this week. You are now completely up to date on everything that's been going on in the housing market, and we'll be back to bring you even more on Sunday in the Sunday Times, on Tuesday for Ask Rob and Rob, and then back here for the Property Podcast next Thursday. So for at least one of those, we hope to see you soon. Bye-bye.
Bye-bye.